Hola, hola, and buenos dias, G and Gs. I am Trek with two Ks, and this is the Weekend Crypto brought to you here on the Gentleman of Crypto YouTube channel. If you don't know, the basic idea is I cover crypto news events that happen between Friday and Sunday, pre-recording on a Sunday night, and then we roll it out Monday morning before the live stream, which takes place around 10ish Monday through Friday. But since we're rolling closer to the 1000th episode, things have kind of been, paced out some, but nonetheless, I'm still here for you on the Monday morning. So before I jump into these stories, let me just say, I want to say thank you to the folks and show my gratitude for the folks who are tapping in, the folks who are still looking to be abreast of what is going on in this space. And yes, there are still things happening in the space, even though we have this crypto contagion going on, even though different little news things or big news things are coming out about the back dealings and how companies were over leveraging their position and lending out money that they shouldn't have lent out. We know all of these things are going on now, but I really thank all of the folks who are still tapping in to get what's going on in this space as far as the news thing, as well as educating themselves. By the way, if you haven't checked out the masterclass, you probably might want to do you probably might want to do that because there's definitely some things in there that will help you be more prepared in moving through these times as they go forward. And I don't think we've made it through the full rough patch yet. But that's just my personal opinion. Nonetheless, let's jump into these stories on what's going on. So, oh God, I seen this and I read it and I was just like, wait, what? Hold on. Phishing risk escalates as Celsius confirms client emails leaked. So, if anybody remembers, the first who was it? The first one that got okay, there is a company called Customer.io, and basically they are the back end automation services for emails and stuff for a number of online companies. Okay. And the first one that had the issue was OpenSea, or the first one to be notified and then say something was OpenSea. OpenSea quickly positioned it that it was all the fault of the worker at the company that provided them the service. And then there was another company that I cannot remember right now who said the same thing. Yeah, so customer.io. They then had another company that went public saying they had an issue. And I said it at the time when the second company came out. I said, there has to be other companies. I'm not going to be surprised if other companies pop up. Lo and behold, guess who's in the list right now? Celsius. It ain't looking good at all. So now you're going to have scam joints running around the place and you're already dealing with the whole thing of filing for bankruptcy. Like, yeah, like what is it what do they say? When it rains, it pours, which is okay, which is also interesting on the end of, and I'm gonna jump to this next thing. I'm not staying on this long. When they knew about it, was it like, which thing do we go with first? Do we talk about the bankruptcy issue? Do we say stuff about dealing with the contagion? Or do we be like, yo, we might have potential issues with phishing email scams, which isn't funny, haha. But the thing that gets me is this company, consumer.io, they're not like saying nothing about any of this leak. If you look through any of their social media, they're not addressing this at all. So it's either they're like, screw the crypto side companies, which I would also imagine, and I'm gonna jump on to this next story, that it's like, I don't know per se, I really don't know actually what the situation is for why they're so like mum's the word, but I would almost argue or imagine that if this is how they're doing this side of the industry, imagine the other companies that have also been affected by this quote one lone wolf inside worker who misused their privilege and operational pass on what they did. I don't know. I feel like this is gonna come out to be a lot more than what is, being present right now as far as the customer.io company and what's going on with them. I think there's more companies and it's bigger than just a crypto thing. Now jumping into this next thing, this caught my attention in part because this is Ticketmaster. If you don't know, Ticketmaster is a well-known, at least here in the US, ticketing company. And so now they're looking to explore their position within utilizing NFT technology. So the basic idea here is like Ticketmaster. Now, let me slow down. Ticketmaster's job posting for a product manager of NFT ticketing tools reveals that the company's intent to roll out NFT based enterprise products across all content categories, including sports and music. I mean, if you just said all content categories, isn't that everything? I don't know. But there's really nothing to this story other than to say, guess what? There is a job position that I'm gonna say, if you're not making arguably, like, for this thing, right? And nope. Yeah. If you're not making near 100 or more on this, they kinda bullshitting you in my opinion. Because if they asking you to make ticket tooling, like you're the product manager, I'm just saying, arguably, you should be in the three-figure range, arguably. Um, if you got the skill set, if you know your stuff about the space, you might wanna, throw your hat in the ring on this. This could be an opportunity for you to change your whole life. I'm just saying. What is the other thing that got me about this? Oh, this part right here, where they talk about in this announcement sent to Cointelegraph, Binance highlighted that NFT tickets could solve fake tickets and scalping problems. In addition to providing access to events, Binance plans to that part don't even matter. The first line, I am gonna bet that whoever they end up with, there's going to be a do we really want to use a full open blockchain or do we want a hybrid like what's that Hydra, or do we want something that is marketed as an open blockchain but it's not really a blockchain, like they might go for Solana or some shit like that. I don't know. But nonetheless, I'm all right, I'm gonna stop. The point being is I'm curious to see who they hire and then how this gets executed. Cause I don't know. I don't see it being executed too well in the first round. They're eventually gonna go to using NFT technology in ticketing as well as other things. I just don't know if I see a full easy execution the first go around on this. So jumping into this next story, um Kucoin. So all right, listen, there's a position that some folks in this space take when it comes to saying like it's one thing to do ETFs for the shit coins or like other crypto besides Bitcoin. And when I was reading this article, I'm like, okay, like I I get what they're publicizing about as far as KuCoin being the first exchange to get the this type of this type of NFT ETF. Now, when you go into the details on it though, if you if you've been around long enough and if you understand how like paper markets work and what's the name of the other financial instrument I can't think of right now, but if you've been around the traditional markets long enough or at least paid attention to people who explain it, let me just say what this product is, right? The basic idea is that the company KuCoin, which is headquarters here, Seashells, I think I'm saying that right, has launched a exchange traded fund tied to major non-fungible token assets like Bored Ape Yacht Clubs. So think about this, and I said it when this was going on about the whole like, oh, it's racist and the Nazis and blah 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 blah. I was like, yo, no one cares about this. They care about the money aspect. Lo and behold, that wasn't even what 40 days ago, and here we are. This deal came public and is going down regardless, right? So now we got this ETF situation happening. Um, The new investment product is launched in collaboration with NFT infrastructure provider Fraction Protocol. I don't know who Fraction Protocol is. I'm not going to cap on that part, but in reading this part right here, the KuCoin NFT ETF is a tether dominated product that marks particular underlying NFT assets like Bored Ape Yacht Club, right? So Bored Ape is one of 5 NFT ETFs that KuCoin is launching. I'm not worried about the rest of this per se. What I started thinking, and the rest of the article don't even matter, is they are basically, even though they're saying that this is gonna be smart contract based, they're going to be able to do X amount of manipulation because in ETFs, like, yeah, there's certain like position holding stuff as far as like more than a day and weeks and whatever. But I would argue this is gonna open up a lot of bullshit in price manipulation. And it's not gonna be at the retail people level. I'm gonna say this again. It's not gonna be at the retail people level. That's this whole thing about ETFs, why I'm not a fan of them. If you want to chase the bag, I ain't even mad at you. Chase the bag, get what you get, right? But I'm gonna leave that one on there. Y'all can definitely deep dive and look into that one. But I see a lot of potential issue going on with this for manipulation. That's just me. Jumping to this next story. Marriages and court cases can be held in the metaverse. Now, when I first read this, I was like, oh wow, like where's this happening at? But then when you get into the actual article itself, and granted, like there are a number of things that happened as far as official partnerships. There's a couple of other things that aren't so positive that also came out from Friday to now. But this one in particular, it isn't actually about saying that, hey, here's what's going on. This is a conference, the Tech Law Fest 2022, on July 20th, that happened in Singapore. The second Minister of Law, Edwin Tong, argued, um even basically he's saying like, hey, we can offer other government services in the metaverse. That's basically what he's saying here. He's not saying that they've made any regulations on it. He's not saying that they're looking to do the framework for how things would be executed. He's just saying like, yeah, I can see it going in that direction. Now where the article closes out, that I thought was more interesting, is that what's it? Earlier this year, Metaverse platform Decentraland hosted the first wedding on its Metaverse with a virtual crowd of 2,000 guests and law firm Rose Law Group to legally formalize the marriage. And so that to me is the more interesting thing. But what's even more interesting than that is this last one here. Meanwhile, South Korea's government has already been taking steps towards the metaverse after setting aside 177 million to develop a platform for citizens to access various government services. This is arguably a step or two above what Estonia does with the virtual citizen stuff, where you can just go online and do all of your paperwork stuff for government services and processes and things like that, like paying bills and fines and things like that, um, as well as getting your digital citizenship that way too. This to me, for what South Korea is doing, is like X amount of steps up above all of the rest of what this article is talking about. If you want to talk about actual jurisdictional, global, like societal level adoption of what we're calling the metaverse now. And I imagine that this also is going to tie into digital identity in some way or form or whatever. But nonetheless, this came out this weekend, right? So jumping into this next one, like I said, I'm not really staying on these things too long. I did like 3 live streams today, y'all. So I'm kind of done and sitting in front of the camera right now. But still got to push on, right? Still got to push on. So this comes out. Helium caught in a web of falsehoods about its partnerships. Now, initially I was like, "Oh, wait, what happened? Who did what?" They didn't do the stuff with the satellite, the dish company, Dish, I think it was. I might be wrong. Nonetheless, so reports have emerged that Helium has excuse me, has misled the public about its partnerships. According to reports, the company has no collaboration with Lime or Salesforce as it touts on its website. And I didn't go to check the websites, but I do think I remember seeing something at the bottom when they talk about like partnership sponsorship, but I haven't been on the site in a while. Nonetheless, the basic thing is they did have interaction with Lime, but they had no interaction with Salesforce. And so apparently they took the stuff off of the website. What I thought was more interesting in regards to reading between the lines on it is when it gets to these two parts right here. So, community reaction. These new reservations about the crypto project came when the company faced increased scrutiny from crypto community stakeholders about its revenue. Now, they've done a number of things, and because I'm gonna give a little defense, because I have been participating in the whole Helium Network stuff, right? They have done some things that arguably did more incentivization than I would argue was needed, and they should have been more steadfast on just like, yo, this is about the tech. But I understand their method of adoption for the technology to proliferate at the retail level, because that's really what they did. They used the monetary incentivization of, hey, if you get this thing, you can get passive income to distribute at the retail level. It wasn't B2B, it was B2C. And so that part was one thing, but the services were B2B, but the adoption slowed down because things was going on during COVID and this, that, and the third. Now, here in this line right here, these new revelations about the company increased during this period, because then they changed some of the the codes on the back end for how the validators and the network um what how you were able to not own, earn reward. That's what messed them up, in my opinion, right? Once they started messing around with that and then they got into like the whole super validator thing and the way they did it, which also messed up the network, you had X amount of people who were mad at the retail side of it. But the real issue on who was mad, it was the VCs and the people at the higher parts of the food chain. That's my sole interpretation. This is not financial advice. I'm gonna say this again. This is not financial advice. I'm just some guy on the internet, and I have been messing around with Helium for a bit. And I would say that when they started making some of these changes on the back end, on how it went from where it was more equitably accessible for devices and rewards at the lower level, and they changed certain things to make it where it had to be more of a stakeholder level, it didn't pan out the way they thought it would have. And then the VCs started talking like, yo, what's going on? How y'all not making the returns? We invested so much money. That's how I'm seeing it. And that's why I would argue if they would have just stuck more to their guns on being on the tech side of it. And I'm not saying it's not a techie thing. It definitely is. I think this would have probably not panned out the way it did for them to push some of the changes in their incentivization models like they did by changing the code on the back end. Also to note, it is a centralized blockchain. Helium is a centralized blockchain. And I think it's stopped at least 2 times now because of issues they've had because of changing the code on the back end with the validators and the miners. So I'm gonna leave that there. I'm just saying, hey, I can kind of understand why they did that thing of the PR partnership stuff, because they were trying to get the VCs off the back and then quell the public opinion of what was going on within the community. But see, somebody always watching, somebody always checking, right? Yo, I'm gonna keep saying this thing too, and I said this earlier today, a couple of times about how blockchains are inherently transparent for transaction and activity. People and the way that the businesses are run on the back end, those are not, and we are seeing it more and more, and how traditional business framework and setups and like individuals and personality types are here in the crypto space. And it's not about transparency. It's not about openness. It's not about equity. It's not about equal fairness or like total inclusiveness. That's just my thoughts on it. Don't take that no way like anybody else on the channel is saying that. That's just me saying that. We all not gonna make it. Anywho, jumping on to this next story about Gibraltar. The minister says he's collecting Bitcoin for his kids. So here's the way that I read this after. Basically, he was on an interview with Cointelegraph. He said something about how he's holding it and he doesn't see the point of using it. Why would he see the point of using it if he already got money out the ass? He not worried about his situation. He worried about his next generation, his seed, his offspring, his lineage, right? That's who he worried about. So he's setting up for them. So this is kind of a expected answer. Also him being at the age of where it's like I'm not really up to having to learn how to use all of the stuff and like the wallets and the scanning, the codes. And no, I don't need all of that. I already got enough fiat and digital, money to make life good for me and mines. So it's his response, or the parts they pick out of the conversation from Cointelegraph, is understandably expected for what he's saying. But but where I get into X amount of the more like, okay, I get it. Y'all are about to do something within this year or next year that you're going to use to either bring in more businesses to your shores. So, so the author of this article gets into a year at the end of the year 2021, Gibraltar took the friendliest step one step further by deciding to incorporate blockchain technology into government processes. In December 2021, the government announced applying a blockchain-based pilot program to deliver public services. Notice we're talking about public services using blockchain technology. This is more about data storage. This is more about being able to decentralize the storage of that data, which eventually, at some point in my mind, means there's going to be a push for digital identity based in blockchain technology. The other thing to note, as far as like Gibraltar boasting about, oh, look, we did blah, blah, blah. Let me get into this other one. Where is it? So Gibraltar is confident that its formula works because it yielded excellent results already. And he's talking about like, well, we had one of the most stringent processes for a company to come to our shores and then apply for the license to be registered in the company. Now, when they started doing that back in 2018, there wasn't a there wasn't an El Salvador. There wasn't a Venezuela. There wasn't a Central African Republic where these countries actually went and said, "Hey, we're going to have we're going to make the law that Bitcoin is a actual currency." Gibraltar hasn't done that. So they still playing the traditional fence on one side, but they want the money from the crypto industry as it grows and proliferates on this side. But they not going all the way in. Yo, I just thought, what's the movie I thought of just now? Anywho, that's my point on this one. So I think this is more so about like, let's throw some stuff out in the public because we about to start setting some things off, but they're not gonna fully cross the line. And or you know what? I could be totally wrong. They might fully cross the line by the end of this year or beginning of first quarter next year and be like, yeah, Bitcoin is legal tender in the country and you can pay for services with it. Who knows? But this might be, what do they call it? Putting in the plumbing. All right, jumping on to this next thing. All right. Like I said, I'm tired, y'all. Sorry. So stand stander wait, Stantander, there we go. Stantander, Brazil. So Santander is a actual European bank. It's actually a pretty sizable bank, and there's a number of locations on the East Coast in the States. um they're basically had a partnership going on with to work within expanding in Brazil and other markets of Latin America, in particular South America, right? And so what am I saying? Um they had a situation. Wait, did I read this one? I did because I highlighted it, right? I'm sorry, y'all. I'm tired. Uh, Earlier in March, the company announced the launch of a token-backed loan. You know what? Let me start back up here. Santanzo Brazil launches cryptocurrency lending platform. So the basic idea is that they opened up a service within their banking institutions that allow people to buy and sell cryptocurrencies. And it's sad to a degree to me because it's like, yo, we're going backwards back into the system. But I guess this is just a part of the growing pains of the whole thing, of where people will have to go through the process of learning. Like, the tech is peer to peer. You can do this yourself. You don't need the middleman. This isn't financial advice. I'm just saying the tech works a particular way that you have access to. That's what I'm saying. And so basically that's what they did. They've been looking to expand, or have been working to expand in Latin America. Brazil is a sizable market. There's another story I'm gonna cover that is in relation to Brazil too. And so yeah, they basically did that, and it's going to show that there is activity of companies coming into Brazil, coming into Latin America as a whole, and this is the way that they're going. And it's All right. This article also points out how earlier this week, Brazil's largest digital bank, Nubank, announced that it has occurred a whopping 1 million users for its crypto trading platform within 30 days of its launch. The wave is there. They are like funneling people back into traditional banking in unbelievable ways. And the other part that's interesting is they're as they also say in this one, growth startup. Nope, that wasn't it. They're making the point that like non-finance related companies are also coming into Latin America and introducing blockchain related or crypto related things. So yeah, I apologize for the sluggishness of how I'm going right now. It's been a long day, y'all. It has been a long day, but I continue on because these are the things that happen in crypto. If you don't know, it doesn't stop. It's 24 hours. Pushing on. All right. Where are you? There we go. So, two soccer teams transfer a South American player using USDC, but there's collateral damage. So the basic idea is this guy right here. Yo, Coindesk, I really wish y'all would take this feature off y'all website with the top header thing rolling down the way it does. But basically, this guy right here, he got what is his name? So this week, Sao Paulo, one of Brazil's most important soccer teams, announced the acquisition of Juliano Galalopo. I think I'm saying that right. A player from Argentina mid-table club Banfield. So he basically went up to I guess he moved up in the ranks. The bottom line of what's going on in this story is, and this is the last story to close out on, is that and I've been saying this for months, y'all. Capital flight controls are being introduced into economies in different forms and means. The basic idea of what happened here is they used the stable coin from with what's the name of the company called Bitso, which is a Brazilian exchange. It's a pretty sizable exchange too, to transfer the funds of the purchase of his contract of him moving from one club to another club, soccer and football club, right? And so the government of Argentina, and what I don't know about this particular thing, because it isn't clear in this way that the author wrote this article, was this new regulation of where if you have foreign money, you have to change it into the local peso, which means you have to keep it within their local economic currency in their banking system. And the government was looking at it as like, oh, well, you were trying to obfuscate the taxes. And this is like, nah, dog. We didn't want to deal with the risk of the USD to Argentina peso scale rate. So now here you have it that the government's like, well, you still need to give us this money. Well, you still need to transfer your tether within with the USDC in 5 days of when you close the transaction into pesos. If not, you're gonna have an extra fine, but you still got to pay the taxes on this. Reportedly, it was around $8 million, right, of how much this dude's contract was worth. The bottom line, what I don't know about this story is, was this a part of the financial regulation or policy before they re-signed their IMF deal, which was an extension by, I think by like, what, 10 or 20 years or something like that, on the money that they owed the IMF in the renegotiation that the government regulators voted in on last year, okay? And that's what the protests were going on about a couple months ago, was that the regulators voted in to do this new IMF deal and put the country in more debt. And part of the clause and rules in that new agreement was they cannot promote blockchain technology or cryptocurrency. We see the example of capital flight controls, and I'm gonna leave it on that one. I'm Trek with 2Ks. This is Weekend Crypto, brought to you here on the Gentleman of Crypto YouTube channel. And if you don't know, well, hopefully you know now, because I'm done, y'all. I'm tired. One.